Hey traders, happy Sunday. This is Ron Haidt at Market Tamer. Hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We'll kick off here with the SPY, the S&P 500 ETF on a daily chart. And you can see the controlled pullback to start the week, and then we were bouncing towards week's end. This is still bullish. We're hanging out at near all-time highs. We take a look at the DIA, similar situation. Somewhat of a controlled pullback. There really wasn't much downside. I mean, from the 24th, which would have been Monday, into Thursday, was about 250 points or so down in the Dow. When you're at 26,000, that's nothing. And then we bounced up on Friday. So this could actually look like a long flagpole, a little bit of a bull flag. Setting up the week, DIA, diamonds, SPY, both looking bullish. Now, interestingly, here is the IWM, the Russell 2000 ETF, the small caps. In Thursday's video, I talked about the reversal on a pickup in volume. Well, Friday, I know it was month end, but still, we surged and we barely got outside that trend line. It's not enough for a clean break. If I look at the closing price from 620, it's 155.29. We closed at 0.50. We are barely above it. I'd like to see a little bit more of a move, maybe up to about 156. That'll clear this trend line. It'll get rid of this candle too. Target would be up there at 160, but that's not all-time highs, remember. That's way back here at 170. But it would finally break the trend line. We would take out a previous high, target 160, and then back up to the highs. Taking a look at MDY, which are the mid caps, also another nice move on Friday. We completely took out the 620 high. Now the target is up there around 360, about 5.5 points higher, and similar to the IWM. Once we get above 360, then we go back up to the all-time highs in the upper 360s. So again, bulls have the edge going into this week. Looking at two ETFs, let's start with the transports, then we'll go to the semis. Transports had a nice day on Friday. They also broke above a previous high and above the 50-day. Their next target pretty much is up near 197-ish, somewhere up there. For a potential trailing stop, I do like the 20-day EMA in red. So transport's looking good. That's good for the market. SMH, well, it already broke above the 50-day back on Wednesday. We tacked on a day on Thursday. Target right back up towards that 120 area, about 10 points higher. So it's about 9% or so. Now, how about gold and silver? Here is GLD. We see the surge. The volume started to come in. We break the 50-day, and we finally started to take out an inner high. Then we took out some other inner highs. Then we took out a bigger swing high. We actually paused. And then we broke out on 619, and then it was gap and up we move. So I have some questions. One is from Eric. Since gold and silver trade overnight, can you truly call these gaps when it's basically essentially traded 24 hours? The answer is yes, I do still call them gaps, and here's why. The most activity is going to take place during the New York Open, 9:30 a.m. Eastern to 4 p.m. Eastern. These gaps then, in that sense, do mean something. Now, we could go to the GC contract and stuff, but then you're talking about futures, and then most people follow the market during the day, so that's why I don't talk about the GC contract, the gold contract. So yeah, I do think the gaps are important, and I do think they mean something. If we zoom in, we've moved up, we've pulled back, we haven't quite even, well, I guess we can say we filled that gap on Thursday. If gold were to start dropping, the big gap filled down here around 128. Otherwise, this is still a breakout. If I go 2 years, you can see we're at 2-year highs. If I go 5 years, we're now at 5-year highs. This is showing some momentum. And on a monthly basis, where did we close for June? It's a breakout. The only issue I have is the lack of volume, and it's happening in the summer. Actually, two issues. The lack of volume on a monthly basis and the fact that it's summertime, which is not typically the best for gold. However, with that said, upside targets on a monthly basis, 150, because that was the support before the bottom fell out in 2013, and then up towards 170. If I take us back to a 5-year weekly, you can already see we've broken out. So really the monthly level is the chart to watch. Now, if I change 10-year to weekly, it's going to be the same thing. There's just a little bit of an inner high here where we stop. There's a little one here at 138. There's a gap fill, maybe you're at 142. Those are so insignificant that it is what it is. Gold is breaking out. Now, can it have staying power? Will it have staying power? Nobody knows. So if I go to a daily chart, which is what I would keep an eye on, let's do 1 year daily, watch the red line. It's going to be a good litmus test. If we close below the red line, that's 20 days worth of data. That's 1 month. That is the first sign there's trouble. If we get below the 50-day in R-ink, that's an institutional moving average, that would basically seal the deal and say, hey, this momentum is a dead duck. I'd even say it's a dead duck if we get below the 20-day. Then there's the 50-day. If I do go to a 2-year and I change this to a weekly, on the weekly chart, look at the explosion. I would also watch the 20 period on a weekly. So if the daily falls on a 20-day EMA and a 50-day SMA, and then the weekly falls on a 20 period EMA, the gold bugs have lost their edge. Here's silver. This is 2-year weekly. Look how bad we were lagging. We still can't get back above 15. If I go to a daily chart and I zoom in, it's still a slight, unorganized pullback. We've almost filled the gap there, and now we're bouncing. This is bullish. This could still be construed as a bull flag, but to me, silver, there's not a whole lot of reward to risk here. 14, get above 1450, get above 1450, then there's 1460, and then you're back up into here. If silver were to have a nice big surge on big volume again after going through this consolidation, maybe something like this day here, where it has a nice strong up bar, then maybe I could get more interested in silver on a daily chart, and I would consider using the 20-day EMA as a trailing stop. The fact that silver is not coming along with gold is a warning flag. If silver was rocketing higher with gold, this would look way better. All right, so enough about the metals, because I get a lot of questions on them, especially right now. I had some other folks ask on the YouTube channel about EA, Electronic Arts. Now, EA is interesting. It did break above its 200-day institutional moving average back on 624. And now we're starting to push higher. You can see it's a little hard maybe to tell, but the volume is picking up a bit. So that's good. There's going to be some resistance around 105, only about 3.5% or so higher, then a little bit more around 107, 108. If we get above that, then we go to the gap fill. That's the big move. So once we clear this high right here, the big move would be up to here. So it is breaking out. That's a good sign if you're a bull. I would consider the 20-day EMA as a trailing stop. Volume is occurring positively on the breakout. Again, another good thing for the bulls. How about NVDA, another stock on the YouTube channel? Now, NVDA does not have a seasonally bullish period this time of year. So even though it is breaking out, it's not doing with a whole lot of conviction. We're above the 50-day in orange. Volume, it picked up a little bit, but it's already pulling back. The 200-day is right there around 175, about $10 higher. And then you would go to this little double top, if you will, which also sort of coincides with the gap around 195. If I had to look at the chart of Expedia, I'm sorry, not Expedia, EA, sorry, Electronic Arts versus NVIDIA, I'd like EA a little better. And EA's seasonality is also way better. 65, 70 or so % of the time, it moves higher over the coming weeks. So in that sense, EA better than NVDA. And let's take a look at Micron, another stock that was asked about. And this is all purely from a technical perspective and for educational purposes only, as always. Here is Micron. Now, they had earnings, if we look at profit charts here, 6:25 at 4 p.m. Eastern. So zoom in. That was the earnings gap. Stopped cold at the 50-day moving average. Nice big volume. Thursday, we get another pop. That's good. Friday, we get another pop. Pulls off the highs. The 200-day moving average is at 38.62. We're at 59. 3 cents below it, close enough. Target, $44. A little bit higher, a couple more cents. We get above the 200-day. Target would be 44. It's possible that maybe 42 can act as a little resistance because that was sort of a ledge, and then we just fell right off. But right now, this is perking up. It's bullish on the daily charts. So if I was a bear, that earnings report pretty much kicked you in the shorts. That would be an exit immediately, and now we're pushing higher. And Nike had earnings, NKE. We take a look at them. 6:27, 4 p.m. had a little bit of an uptick. Now, here's the thing with Nike. You have the most recent, and it's even bearish engulfing. Let's zoom in from 624. So we got to get above that. Then you have this consolidation north of 87.50. It's a little bit, technically it's bullish walking into Monday, but there's some definite overhead supply now. However, if Nike were to roll over, watch the 200-day. That's going to be the first sign of trouble. And then if we take out 77.50, which is the swing low from the beginning of June, then the support somewhere down at 72.50, 70, and 67.50. Right now, Nike bullish, possibility of an inverted head and shoulders, but head and shoulders patterns can appear all over the place. I'm not a huge believer in them. Right now, bullish, target to the upside, and then watch the 200-day to the downside. All right, that is it. Wish you guys a fantastic week ahead. Remember, July 4th, Independence Day is Thursday. Markets will be closed. We're probably going to see a lot of lighter volume this week as well, as a lot of traders just take the whole week off. And Thursday or Wednesday will probably be slow, and Friday probably really slow in between the weekend. So take good care. We'll see you next time.